800-3818. That's 800-378-3818.
Individuals and businesses with tax problems, listen carefully. If you owe over $10,000 in back taxes or have unfiled tax returns, U.S. Tax Shield can help you take back control. The IRS can seize your bank accounts, garnish your paycheck, close your business, and file criminal charges. Our team of tax attorneys can stop collections and get you protected. U.S. Tax Shield offers a price protection guaranteed quote to get you protected today. U.S. Tax Shield is A+ rated with the BBB, so call 800-466-9625. U.S. Tax Shield, 800-466-9625.
You're locked into Money Matters Radio, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up. Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Congress is poised to pass a bill to keep AM radio in cars, but time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. Our guide this month is titled Retirement Tax Efficiency. Mike, when people retire, what are some of the biggest surprises that they receive in the tax department upon retiring?
Well, most folks end up avoiding it, but for a lot of people, when it comes to Medicare, there can be a little bit of surprise when it comes to how those premiums get calculated on a year-to-year basis.
What types of things can factor into where those premiums end up in any given year?
Yeah, so there's something called IRMA, which stands for the Income-Related Monthly Adjustment Amount. And long story short, they base your Medicare premiums on your combined income, but sometimes that you don't really think about items that fall into your income. So let's say you raised your family in this home, and somewhere in the Northeast you end up selling it, and you end up making more than $500,000 on it. Or maybe it's a parent's property or a big stock or a big retirement package. You can actually see your Medicare premiums take a severe adjustment. And that's almost never income that people are thinking about. Like, no, I sold my home. Why should that factor into my Medicare? Well, it can in certain circumstances. And so it is just one area that we look at to say, hey, this is a surprise because it's a tax that nobody faces until they turn 65.
Our guide this month is titled Retirement Tax Efficiency, and there are 2 different ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can request the guide at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Welcome back to the Financial Exchange. The week of craziness here in financial markets and economic data continues with earnings coming out this morning. Big earnings after the close today with Microsoft reporting. Just 6 minutes ago, we got an updated report on the state of the labor market. We'll get another 2 of those this week, actually 3, between ADP, employment, between weekly jobless claims, and then finally the June jobs report coming out on Friday. And then I think probably most impactful, the largest and biggest chicken lawsuit that I can personally ever remember. So I'm glad Tucker caught that story. But let's start right off, Paul, with probably the most relevant item for this week, which would be the Federal Reserve meeting coming up on Wednesday. 2 p.m. you'll see the announcement. 2:30 p.m. is when Jerome Powell will take questions at his press conference. And widely anticipated that there will be no rate cut at this exact meeting. There's almost nothing that could change that at this point. We got the JOLTS report this morning, did not indicate anything that was a significant change in the state of the labor market. So that no cut scenario is probably pretty locked in for tomorrow. However, everyone's going to be dissecting his description of this economy right now. So what are we going to be looking for out of this meeting on Wednesday, and what do you suppose it means for rate cuts in the future?
Really, Mike, what we're going to be focused on is not what is going to happen in terms of rate action tomorrow, because likely, as you mentioned, there's not going to be any action in that direction. However, we finally sit on the precipice ahead of the September meeting of what will likely be the first Federal Reserve cut this year. Obviously, we've talked about this a lot on the show this year, but this was supposed to be a year heading into 2024 where we would see a significant amount of cuts. And we know what happened the first quarter of the year, particularly February, March, came out with some pretty stubborn inflation data, and that really shelved all those plans. We now sit in a period of time where it does appear as if it is now appropriate for the Fed to consider having their first rate cut. So really the focus for tomorrow's meeting is any language and any of the messaging that gets edited or changed slightly to indicate what the future quarters are going to look like. If we take a look at the CME futures, which assess a probability of rate cuts going forward, the September meeting that I alluded to previously, it does appear that there is a 86% likelihood that there will be a cut at that point in time here. And then going out November and December, it also appears that the highest probability is that we see 2 more subsequent cuts. So that will really be the focus. I'm sure he won't tip his hand much further than what we see from the September meeting, but we'll be parsing through any type of commentary to see what those future meetings look like.
Yeah, so, I mean, look, unless you're following the Federal Reserve closely, these things are quite honestly just parsing words and really getting into the weeds. But Jerome Powell and the Fed will describe the labor market and the state of inflation in their written prepared remarks and what words they use. In the past, they've used words like quite strong or very strong when describing the labor market. I think they will probably back off of some of that. And then they specifically call out the balance of risks between inflation and employment. And there, too, I expect them to pay a bit more attention to the employment situation. I will say, if we take a look at Fed funds futures, they look pretty reasonable for the short term. If you take a look at September, November, and December meetings, basically saying that there will be rate cuts in all likelihood at all 3 of those meetings to the tune of 0.25% each, which I think is possible. Might not be my base case, but I think is possible. When we get out a full year here, and we've cautioned about this before, things might be getting ahead of themselves a bit. When I take a look now at the June 18th of 2025 meeting, the most likely scenario, according to that same measurement tool, is for rates to be sitting at 3.75 to 4%. Right now, we're at 5.25 to 5.5. So, doing the math there, that is a big drop in rates. And so, maybe there's just some scenarios where we're pricing in the possibility of recession, but you don't, in my view, likely get there without one. And so just something to keep an eye on here. We've seen this many times in the past where investors are betting on significantly lower rates, this year being a key period of time where that happened, and they really didn't come to fruition. They didn't materialize, and that may happen again in the future. I wouldn't count that possibility out.
If we have one more inflation report that goes in the other direction, Mike, to make that counter argument, then all of a sudden these probabilities change very quickly. So it is important to reiterate that point that these probabilities are assessed at going at the same course. But as more economic data comes out, very quickly there can be a reverse in what policy is looking like going forward.
Tucker found a lovely piece today in the Wall Street Journal, and I started reading it and immediately knew why he picked it, because seemingly every single day we are getting op-eds in the Wall Street Journal about the Federal Reserve and how they're doing it all wrong. And they're always in completely different directions and different criticisms of the Federal Reserve. Today's from someone from Michelson Capital, actually seemingly the founder of Michelson Capital, John Michelson, and making the case against lower interest rates. And Paul, I don't know how much of a deep dive you did on this, but I got to tell you that his arguments are just not connecting for me. And we had a similar story yesterday where the Fed's too focused on interest rates. They need to be focused on the balance sheet instead. Or whether it was that or whether you had Mohamed El-Erian saying that the Fed is behind the 8 ball and needs to cut rates faster. Like every single day you get a different argument from, admittedly, a very intelligent and well-written person telling you why the Fed is wrong this time. And I have to say, I'm not buying this one.
This piece really ticked me off, and I'm sure that's why Tucker put it in there. So much so that I started researching this particular guy's credentials, John Michelson, as you were mentioning before. And I do try to step back before I rail off on him and realize that just like in sports talk, which I follow pretty consistently too, it is July. We are in the dog days of summer, and whether you're the Wall Street Journal or your ESPN, you have to keep eyeballs on your page, and that sometimes comes out with these op-eds that are trying to get people fired up. And they got me hook, line, sinker on this one, as you mentioned, because he goes on this diatribe breaking down why the Federal Reserve should not lower interest rates, and he makes these claims such as just broad sweeping claims that have no data behind them, such as most people have paid off their student loans, so they wouldn't be punished by higher rates staying that way for longer, or these other ones by saying artificially low interest rates were a disaster that distorted lives and incentives. This is hearkening back to, the pre-pandemic era and just
post-financial crisis,
right?
About how that ruined America having low interest rates, right? I mean. Yeah, across the board. Like the best argument that I think he's come up with in this entire piece about why the Fed shouldn't cut interest rates is because it will help pension funds deal with their obligations. And I'm like, correct me if I'm wrong, I don't think that funding pension funds is one of the Federal Reserve's key obligations to Congress.
And that's what I wanted to bring up to all of our listeners out there, regardless of this piece, because like I said, whatever, it's the end of July. But the focus of the Federal Reserve is to have maximum employment, stable prices, and to moderate long-term interest rates. And if we look at their checklists, we're getting to a point where you can say relatively convincingly on the stable price front, and I'm not ignoring that the last 2-3 years of inflation were awful for all of us American consumers, got it, but just saying where we sit today, stable prices, we're getting back down to their target. They're now shifting the focus to the labor market, which we're going to talk about. But the things mentioned in this op-ed here, whether it's student loan rates, helping the middle class, all these other items, that's not their job. Climate control, that's not their job. They have to focus on these three objectives, which are really friggin' hard to keep under control. It's really challenging to do those as it is. So expanding it to these other areas, that's just not what they're meant to do. And the case made here is just a really flimsy one.
You could make, to me, a compelling argument that low interest rates were beneficial to those with assets and capital and destructive for households who couldn't, your grandparents who couldn't get money in a CD. It hurt them overall. Like, I get that case, but once again, we have a piece here that seems to be arguing the Federal Reserve should be focused on something other than its dual mandate. That, seemingly from this article, the Fed needs to be worried about the interest rates' impact on innovation in the economy and pension fund funding and wealth transfer. And once again, those are potentially important things for us to be concerned about. Do not get me wrong. It's Congress's job. It's not the Federal Reserve's job. And I don't buy the argument in the first place.
There wasn't innovation. I just disagree with that, too. I mean, first of all, it's a sweeping generalization to say that there's no innovation over the last 10 years or so. That's just not the case. You could argue that it really incentivized people to innovate more because you could borrow money so cheaply it allowed for businesses to take more risks. So I know that I am falling really victim to all the different issues with this particular piece. And then my last problem with this, Mike, and I'll get off my high horse, is he fails to mention the labor market at all. And it segues nice into what we'll be talking about later in the program, where if you keep interest rates higher for longer, corporations have to borrow money at higher rates of interest. Thus, so they won't expand factories and hiring and things like that. That's the whole purpose of what the Fed is doing. And he doesn't even acknowledge the fact that, hey, that's a concern by leaving interest rates higher. Yes, your grandmother can get a 5% CD, but there are trickle-down effects to the middle-class economy in terms of the labor market. If you don't have a paycheck, but you can get a 5% CD, that doesn't really add up.
All right. I think I've done my fair share of criticism of Mr. Michelson. I hope that he doesn't take it personally. I just don't think this was terribly well thought out. Let's take a quick break. When we come back, I want to talk a little bit more about the labor market. There's a piece in the New York Times today asking if the labor market's about to crack. We just got a bit of data on the labor market, and we'll get a heck of a lot more later this week. So let's take a quick break, and a little bit of a review of the state of the labor market is next on the Financial Exchange.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning, right here on the Financial Exchange Radio Network. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us. but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Many of us have retirement savings that are held in tax-deferred accounts like 401ks and traditional IRAs. Hi, this is Chuck Zada from the Armstrong Advisory Group. A heavy reliance on tax-deferred savings has significant implications, such as facing large tax bills during retirement. If you've been diligent about saving money, you might find yourself in the same situation after you retire. Our new guide this month is called Retirement Tax Efficiency. It outlines ways to develop a plan that helps you manage your retirement income and limit your tax liability, putting you in a more advantageous position for a secure financial future. Get your free copy today by calling 800-393-4001. That's 800-393-4001, and you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
The Financial Exchange has built an incredible partnership with the Disabled American Veterans Department of Massachusetts. We can't wait to take part in this year's DAV 5K set for Saturday, November 9th at Fort Independence on Castle Island, and registration's now open. You can help our great American heroes by walking, running, or simply making a donation. Your gifts will support services such as the Veteran Advancement Program, which offers permanent and affordable housing opportunities for veterans and their dependents. Learn more at DAV5K.Boston. The DAV 5K Boston is presented by Veterans Development Corporation.
Paul, the New York Times asks whether or not the labor market is about to crack. My summary of this article is, we can't really find any evidence, so instead here are a bunch of anecdotes. They really didn't supply much of anything. And they acknowledge that they really didn't have much evidence that the labor market is weak at the moment or on the cusp of weakening. And quite honestly, I don't blame them. Notoriously difficult to predict when and if the labor market is going to fall apart. But let's talk about where we have gone over the last year or so. In May of 2023, the unemployment rate was sitting near an all-time low ever of 3.4%. We have now seen a slow uptick to about 4.1% as of the most recent reading. We'll get a new reading on Friday of this week. And, an important piece of information, this has largely not come via layoffs. The uptick on unemployment that we've mainly been seeing here is just a mismatch between how many companies are looking to hire versus how many people have entered or re-entered the labor market. The people looking for work at this point in time has been causing the major shift in unemployment. 4.1%, really low unemployment rate. I don't think anybody would disagree with that, and not in and of itself a concern, only a concern if it continues the most recent trend upwards. Just this morning at 10 a.m., we received a report on the state of job openings. Little change month over month. We saw the total job openings number sitting at 8.2 million. So if you run that little calculation in terms of how many people are currently unemployed, which is about 6.8 million people, number of jobs open right now, 8.2, you're sitting at a ratio about 1.2 jobs out there, job openings out there per person looking for work. Still pretty solid labor market, just a lot weaker compared to where we were in 2022 when that number was sitting at about 2 jobs open for every person looking for work.
Yeah.
Anything else that would indicate to you the state of the labor market, Paul?
Yeah, I think it's some of these comparisons, like you mentioned, are so difficult to do just because we reached that peak of the ratio that you were referring to previously of about a 2-to-1 in March of 2022. But I felt as if Barron's, which is another piece that we'll kind of get into, did a very good job of summarizing 6 different charts or indicators to look at in terms of what we're focused on in the labor market. Cooling versus collapsing, really significant difference. And we sit in a period right now where it's cooling, but it's cooling off of significant highs, the labor market in general. No indication yet of collapsing, but the overall reason why we're so concerned about this is because, and this is put well by the Federal Reserve president from Chicago, unemployment typically goes up like a rocket, but it comes down like a feather. So it takes a really long time to get to 3.4%, that 50-year low, but it can spike up really dramatically very quickly. And so that's why the Federal Reserve and people who follow the economy in general are so focused on some of the other signs out here. We talked about that ratio of jobs out there to those unemployed. Just in terms of the hiring, it does seem like wage growth has decelerated a little bit. We're looking at about 3.9% year-over-year average earnings growth. That was down from some of the really steep paces that we saw during 2022 and 2023. Otherwise, in terms of jobs that are being added each month, we sit at about 205,000, but there's been a little concentration on those. So those are the other things that I'd mention in terms of where we sit from the labor market at the moment.
Yeah. So again, the answer is that at the moment, things are still fairly tight. Anecdotally, you definitely hear stories of, new college grads having a tougher time finding work. There seems to be a shortage of some very skilled workers in some areas, but they're being really selective, employers are, about who they hire. The interesting thing that I want to continue to monitor that we really still have seen almost no change in is the state of remote work, right? I mean, if we do in fact see a loosening labor market, and if it's still the case that companies actually want their employees back to the office, one would think that that presents itself an opportunity. From what I have seen, again, I like actual data on some of this stuff. So Castle Systems, we've talked about before, they are a office-based security company, and they track badge swipes among all of their offices across the country, and they look at 10 major metro areas to try and determine, hey, what is the state of things in terms of return to office? And as of July 23rd, it was still sitting at 60% of pre-pandemic numbers. So you have seen an increase, right? In 2022, it was just hovering around 50%. But in that week, you saw around 60% occupancy, or at least occupancy in comparison to where we were in 2019. And I'll be interested to see if there's any uptick in that, because culturally this has been a big, big shift.
Sure.
Let's take a quick break. When we come back, full market update with Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
An unexpected nursing home stay can be devastating to your savings. Call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. Protect your assets from the nursing home and maintain your wealth. Call right now. 866-848-5699. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals? Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable and it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be
it would be countable if it's worth more than that. If it's worth less than that and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699. Or you can simply request the guide from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in mixed territory and mostly quiet as the busy week on Wall Street picks up steam with more second quarter earnings and the kickoff to the Fed's two-day monetary policy meeting with the decision on interest rates tomorrow afternoon. Right now, the Dow is up by 0.33% or 157 points. S&P 500 is off by 1 point, and the NASDAQ is down by 0.33% or 59 points. Russell 2000 is up by 0.33%. 10-year Treasury yield is flat at 4.17%, and crude oil off 1%, trading just above $75 a barrel. Tesla shares are down by half a percent following news that the electric car maker is recalling more than 1.8 million vehicles in the U.S. due to a software issue that could result in the hood fully opening and obstructing the driver's view, kind of like Tommy Boy. The NHTSA said that the issue risks failing to warn a driver when the hood of the vehicle is unlatched, increasing the risk of a collision. In response, Tesla will release an over-the-air software update free of charge. Meanwhile, Merck posted better than expected quarterly results, but reduced its annual earnings guidance, sending that stock down by 8.5%. Sticking with the pharmaceutical space, where Pfizer raised its outlook after posting stronger than expected second quarter results. That stock, however, down by 2%. Elsewhere, digital payments company PayPal logged higher quarterly profit and revenue after reporting continuing growth of its unbranded card processing volume. PayPal also hiked its annual earnings guidance, that stock jumping by 8%. Procter & Gamble missed second quarter earnings expectations, sending shares in the consumer goods store down by 6%. And after today's closing bell, we'll see anticipated second quarter results from Microsoft, Starbucks, Mondelez, and AMD. I'm Tucker Silva, and that's Wall Street Watch.
You can't latch the hood too well if you don't take the can out, you no-selling waste of space. I swear to God, you're worthless.
I'm trying my best.
Holy shnikes.
Sorry. I always forget if it's Black Sheep or Tommy Boy. I mix those two up, but nonetheless, I digress. Paul, the NASDAQ has been having a bit of a fall from grace recently, and we've talked a lot about the rotation out of tech stocks, specifically since July 10th. And what's been interesting has been this big divergence between the performance of, say, the NASDAQ versus the Russell 2000, which is generally your smaller size companies. And again, I think the main piece of commentary here would be just that it's interesting, and it's pretty rare to see such a divergence like we have seen. But now we're having these dramatic stories getting written that it's a cruel summer for big tech. So let me just give a status update for you. Even through today, the NASDAQ composite is up 17% through the year. Mm-hmm. And more specifically, it's up 2% since Memorial Day. So I don't know when Wall Street Journal decides that summer starts. Maybe they're of the opinion of it's June 20th, in which case the NASDAQ's flat since then. But we've had cruel periods of time for tech stocks before. This summer isn't one of them. Like, cite 2022. Go look at NASDAQ during the dot-com bubble. Like, those are good periods of times that I think you can describe the performance of tech stocks as cruel. Right now is very simply not one of those times. this isn't my opinion, guys. This is just stated fact. This is not that bad.
It's not, and it's just technology has weighed so significantly on the overall stock market performance year to date, and even going back the last couple of years. That's why it's always going to be under a microscope. But if you look at the earnings rise that's anticipated from the S&P 500, it's supposed to be about a 10% year-over-year earnings growth from the second quarter of last year through this year for those companies that are in this S&P 500. If you strip out the technology companies, it's about 6%. So they do contribute to a lot of the future earnings growth that's anticipated from S&P 500 companies. But I do think that we're in an interesting place, Mike, with some of these tech stocks out there and their relation to AI and future earnings growth there. I was listening to a podcast recently where they were talking about, similar to the late 90s, .com boom, there's actually revenue to back this up. But a lot of companies out there, Meta and Alphabet recently, are saying that they know they're overspending on AI and they're not going to get these immediate returns on it, but they want to make sure that they're not behind the curve, 5 or 10 years from now. And there likely will be a point in time, I don't know if it's tomorrow or in the fall or winter, where some of these tech stocks are just going to sell off because they are at such high valuations, and they're basing these valuations off of significant boosts to earnings from AI development. And that could take 5 or 10 years, just like what we saw with the internet as well. So it's an interesting place that they find themselves in, perhaps a pivot point. Not a cruel summer, but just something that I'm looking at in the future over the next 6 to 12 months.
Yeah, and look, I mean, this is, as much as I try and minimize the pain that tech investors have gone through this summer, because honestly, it's been pretty minimal if you're a tech investor. You should be used to volatility in this case. But this week is pretty pivotal, right? We are hearing from Microsoft. We are hearing from Apple. We're hearing from Amazon. And who am I missing? Meta. We're hearing from Meta as well. So, look, we're hearing from 4 of the biggest ones out there. No, we don't hear from NVIDIA in terms of their earnings. That comes a few weeks later. But this week does have the ability to either reverse this entire trend or exacerbate it. I don't think you'll leave this week just kind of with the status quo. I think it'll be a series of questions that are being asked of these companies as to what their plans are, and I doubt they will all go in the same direction when it comes to their spending on AI and the return that they are seeing. So more to come on this. This is why this week is so pivotal because really tech has been the sector that's carried the entire market this year, and quite honestly, the performance from the other 400 or so companies has been pretty lackluster. Not only their stock performance, but profit share and sales growth has not been great for the rest of the market, and this has been the area that has really kept things afloat. Delta hiring David Boies to potentially look at a damages lawsuit against CrowdStrike. I am sure that David is very well known in certain circles, but I got to tell you, it's not. I didn't read this article and be like, oh man, they went and got David. But it turns out this is a very significant attorney that has had big cases in his past. I have no idea where this goes, quite honestly. I can't imagine that Delta and CrowdStrike were operating on some loosey-goosey contract that allows CrowdStrike to be easily sued in the event of a problem like this.
Right.
So I'll be fascinated to see where it goes. But, I mean, the estimates on damage to Delta as a result of this have been between $350 to $500 million. And I struggle to think of any other company out there that has suffered worse from this outage than Delta Airlines.
No, they certainly were the ones that were hit the hardest here. And I would be a little skeptical, too, in terms of what you could really reap from these two companies. They certainly have big pockets between Microsoft and CrowdStrike, but this idea that software not functioning, appropriately because of an error, mistakes do happen, as painful as this one is. I'm just not sure really what could be the resolution, but perhaps they're just aiming for some sort of settlement just to sort of get some money and part ways from it. CrowdStrike faces a really significant uphill battle from what they experienced from the outage.
You know what must have happened, Paul? CrowdStrike was very generous in that they sent all of their customers $10 Uber Eats gift cards as a result of this. Deltas must have just gotten lost in the mail. That's why this lawsuit's taken place. Otherwise, they would have been fine because, whenever I have a worldwide outage of one of the most significant software programs out there, if they just send me a $10 Uber Eats gift card, I pretty much set it to the side.
That should cover the delivery fee.
Yeah. It should be all set. So let's take a quick break. When we come back, we're talking about boomer candy. And I guess just like anyone out there that is peddling candy for a certain age demographic, my advice to you is be suspicious. So we're going to cover boomer candy when we come back and what the heck the Wall Street Journal is talking about in this piece. Quick break. We'll be back with that next.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston. It's a run and walk to support the DAV Department of Massachusetts. Saturday, November 9th at DCR's Castle Island in South Boston. Together, let's honor all who have sacrificed for our freedom. Register or donate now at dav5k.boston. That's dav5k.boston.
An unexpected nursing home stay can be devastating to your savings. Call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. Protect your assets from the nursing home and maintain your wealth. Call right now. 866-848-5699. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Many of us have retirement savings that are held in tax-deferred accounts like 401ks and traditional IRAs. Hi, this is Chuck Zada from the Armstrong Advisory Group. A heavy reliance on tax-deferred savings has significant implications, such as facing large tax bills during retirement. If you've been diligent about saving money, you might find yourself in the same situation after you retire. Our new guide this month is called Retirement Tax Efficiency. It outlines ways to develop a plan that helps you manage your retirement income and limit your tax liability, putting you in a more advantageous position for a secure financial future. Get your free copy today by calling 800-393-4001. That's 800-393-4001, and you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud partner of the Disabled American Veterans Department of Massachusetts. The DAV does incredible work, and it was one of the first organizations I became familiar with after my military service ended in 1984. As I built my company, Veterans Development Corporation, I did it knowing that I'd be giving back to fellow vets who need jobs, support services, medical supplies, and much more. I work with disabled veterans every day and is one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts in this year's DAV 5K Boston. Please join me in supporting this tremendous cause by taking part in this year's event or by making a donation to the DAV.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Congress is poised to pass a bill to keep AM radio in cars, but time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands is the perfect destination for your next vacation. Enjoy St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
So we're going to talk next about a new-ish class of funds that have been rolled out there over the last few years, mainly ETFs that are out there, but taking all different all different strategies and all different types. And the main appeal here, what they're attempting to appeal to, is older or retired investors. And like I said, these take a number of different formats. We're not going to mention any of them specifically, but you can check out the Wall Street Journal article yourself on Boomer Candy if you want here. But there's a few different strategies that have been getting pretty popular. One is these funds that use covered calls, which is an option strategy, in order to generate a relatively low volatility fund that pays a really high dividend rate. You're seeing some out there with like a 12% dividend rate out there, and the idea is, hey, it's not going to go up or down quite as much, but look at this massive dividend rate. And so far, it's been relatively successful in delivering on that objective of, hey, we're basically buying stocks and writing options on them to deliver that dividend rate. There's another category out there as well that are being marketed as these protection ETFs. And I'm reading from one of the websites right now. They're advertising 100% capital protection, no downside risk over the 1-year outcome period. This is a fund. This is an ETF that's out there. And then defined upside participation with exposure to the S&P 500, NASDAQ 100, or Russell 2000 to a cap. You can imagine why this would be really appealing, right? It's basically saying, hey, at least the advertising on this one especially is saying, hey, you're going to track the S&P 500, you're not going to be able to go down, and your upside is going to be capped in the 8.5% to 9% range. Here is my word to the wise. If you go and then actually research some of these and go and look for some of the really small text that's out there on the web page, you'll find some disclosures such as the one I'm about to read you. Quote, "There are no assurances the funds will be successful in providing the sought-after protection." It's one of the first disclosures that they put in there. I don't know how these funds are able to advertise the way that they do, but there's a few different potential pitfalls with these types of strategies. Paul, I don't know how much you've encountered them or took a look through this piece, but what do you see as some of the main risks that are out here when people are looking at these, like I said, growing in popularity strategies that are out there?
Some of the concerns that you have is oftentimes what happens with ETF funds is there's a huge boom in terms of number of entrants into a particular market, and ultimately you have to rely on them to efficiently manage your capital with these strategies. And so, to your point, there can be funds that go awry or run into liquidity issues, particularly when you're trading options. It's not as if it's like trading Apple. It's not a market that is, as heavy in terms of volume, so you can run into issues there. And then there's also the taxation concerns that this piece lays out, where the dividend yields that are generated can be classified in some instances as qualified dividends, which are under the capital gains rates, which typically range from 15 to 20% on the federal side, depending on your tax bracket. Ordinary income or non-qualified dividends obviously puts those dividends into a higher bracket depending on where a person files. So there are those tax considerations that come in as well. And then there's just always that concern when a lot of fund managers or ETFs pile into a particular market, you have to be cautious in terms of which strategy you're hitching your wagon to.
So here's the main takeaway. The good news is that none of these strategies themselves are new. It's not some new innovation that, traders are using options to build a strategy like this. What is new is the format that it's taking, which is, retail focused funds for the everyday investor. And so my word of caution to folks is you should exercise caution when making an investment decision at any point in time. You need to do that. When you're talking about putting money into a product that doesn't really have any track record and has not existed in a down market, that threshold, in my opinion, gets a heck of a lot higher. And so my word of caution is very simple. If you're out there and this type of strategy is appealing to you, or you're reading it in a Wall Street Journal article or New York Times article and saying, wow, this seems like it could be really, useful for a portfolio, I would just caution you to take the time and do a little bit of extra research, especially when it comes to these types of strategies. You should always do that. But when it comes to something that has not been tested by a severe market downturn, I get really concerned about the disclosure that they put in their very first sentence: no assurances that the fund or funds will be successful in providing the sought-after protection. If you are looking around at your own investment portfolio and trying to figure out how some new strategy is going to play a role in your future financial and investment strategy, maybe you're facing a new stage of life, maybe you're getting closer to retirement and looking at different ways to lower the overall risk profile of your portfolio, maybe you're just not sure where you need to be, please speak to the folks at Armstrong Advisory Group. Let us help you assess that alongside you and really educate you on what the tools are that we use with our clients to build that successful strategy. You can call our offices at 800-393-4001. We offer free financial consultations and have offices located throughout New England. And that number, once again, is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Unfortunately, another scam of the week to cover. Some poor, well-educated man lost $740,000 to scammers from his own retirement funds. This is a retired 70-something-year-old lawyer. He became convinced that he was part of a government investigation. It looks like this was a very, very high-level scam that was quite successful. They took control of his computer, locked him out of his retirement account, made it look like it was the 800 number from that retirement company. They won't disclose who it was. And convinced him, hey, we're investigating this. You're working with an IRS agent and the fraud department of this custodian. And turned out they were just having him funnel hundreds of thousands of dollars out of his own retirement account and into scammers, which the money's now gone forever.
Really scary, and just these aren't slowing down, Mike, unfortunately. I'd like to say that there is something in place to slow them down, but they're not. It just is big game hunting for a lot of the cybersecurity criminals out there that do this type of thing. So the hypervigilance is more important than it's ever been for all of us out there who access our accounts online, which has been really the permanent shift that we've seen in our industry. But passwords and multi-factor and
constant vigilance.
Vigilance is just really critical.
$12.5 billion in 2023. That's a tripling from 2019 levels of these scams. And the only message is you are not too smart to fall victim to this. It happens to some very intelligent people, and you have to be prepared for it. Quick break, but a lot more to cover in the second hour. We'll be right back at it. Stay tuned, everybody.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com CrowdStrike.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to ArmstrongAdvisory.com and let us help you secure your financial future. That's ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is all about retirement tax efficiency. Mike, let's go through some of these items that people typically hit in retirement as key drivers of income. Let's start with Social Security and its taxation.
Yeah, so for only about 40% of American households is Social Security actually taxable, but it's a pretty low threshold where it does become taxable. There's a combined income calculation they put through, and up to 85% of your Social Security benefits can be taxed depending on your income.
Other places that retirees typically generate income, interest from bank accounts and CDs and things along those lines. How is that typically taxed? Any changes for retirees?
Yeah, so no real change other than all of your other income is going to adjust, and so the rate at which you pay might change, but you're going to be taxed federally as well as by your state if it has an interest or income tax on the interest generated from something like a CD. Whereas if you're generating it from some other tool, such as a U.S. Treasury bond, that interest is not taxable, at least at the state level.
What about when we look at IRAs and Roth IRAs? People have been contributing, but now they're finally withdrawing once they retire.
Once again, in most states, federal and state taxes, if your state has an income tax. The one nice thing there is you're not facing the FICA taxes that you paid while you were working, but everything else is coming out of those IRAs.
And Roth IRAs should be tax-free after the money's been in for 5 years. The guide this month is titled Retirement Tax Efficiency. 2 different ways to request it. First, by calling 800-393-4001. Second way is by visiting ArmstrongAdvisory.com. That number again is 800-393-4001 or visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who have served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning and welcome back to the Financial Exchange. The week of craziness continues here in financial markets. We've got mixed markets in early trading so far today, with the NASDAQ down nearly 200 points or more than 1%. S&P's down about 30 points, a little bit more than 0.5%. And the Dow is actually up at the moment, as is the Russell 2000, albeit on the Dow only 0.1 of a percentage point upwards. So I mentioned the craziness this week. We did receive at 9 a.m. today the S&P Case-Shiller Home Price Index. We saw consumer confidence and job openings at 10 a.m. Tomorrow we will get a look at the labor market with the ADP employment report, but quite honestly nobody really pays attention to that. The big news tomorrow has to do with the Federal Reserve and their afternoon meeting at 2 p.m. You have jobless claims on Thursday, ISM manufacturing on Thursday, the unemployment report coming out Friday morning. So a slew of economic data. And then on top of that, you have $10 trillion worth of market capitalization reporting their most recent quarterly earnings with just 4 companies. You have Facebook parent Meta, you have Microsoft, Apple, and Amazon all reporting earnings and likely to get a lot of questions about their artificial intelligence spend and what the payoff looks like so far. So busy week continues here, and we'll be covering all of it. Paul, anything else catching your eye, anything that we haven't covered yet?
Or it will be the earnings report will be the biggest focus, really, from those big companies that is significant this week.
You did see an uptick in consumer confidence, according to the Conference Board, that rose in July to 100.3 from a downwardly revised 97.8 in June. So confidence got a little bit higher. Home prices hit a new high in June, according to the report on the state of the Case-Shiller Home Price Index. So that Home Price Index, 20-city house price index, rose 0.3% in the month of May compared to the previous month. So they are now up 6.8%. Home prices are, specifically in that 20 major U.S. metro markets, up 6.8% in the last 12 months ending in May. So in spite of the fact that we are seeing a dramatic uptick in inventory, not yet leading to dramatically increased sales, and certainly not leading to any drop in pricing so far this year, at least again on that 20 city index so far. Speaking of homeownership, there is a piece today on the state of renters in this market, and really just the pessimism that renters are feeling at the moment, I think partially because, or maybe mostly because, of the state of the housing market. At this stage, the inventory of homes today is still only about 70% of where we were in 2019, in spite of the fact that, look, more people are of home buying age, more people are looking to own a home compared to 2019. We've had population growth since 2019, and there are dramatically fewer homes for sale. Interest rates are considerably higher, and you now have 54% of people that are renting right now saying that they will never be able to buy a home in this environment. I mean, Paul, what takeaways do you have, or what advice would you have for somebody that is sitting there trying to deal with this problem of, I can't buy a home and I don't know that I'll ever be able to?
If I was as harsh as Mark Vendetti, I would say good luck. But I'm not going to be that harsh. Though I don't know if I have a fantastic suggestion, just because the thing that's not mentioned in this piece, Mike, is the creation of new supply. And none of us really have a solution as to how to best accomplish that nationally, to allow for there to be more inventory out there. You mentioned the uptick in inventory. I think it's really important to make the point that you did, that yes, inventory has ticked up from what were meager levels last year, but it's nowhere near where it was previously pre-pandemic. And I just don't have an easy solution to that. You can make the argument, well, Paul, if interest rates come down, now these renters that are mentioned in this piece are going to have a better time of being able to go out there and buy a new property. I don't know about that. If there's limited inventory and you lower down the mortgage rates, that means more buyers on the market, and then we're subject to that same issue where there's a bidding frenzy on many homes. Sometimes perhaps I'm in the New England bubble where it just seems really pessimistic. Yeah. And so perhaps that influences some of my commentary, that if you and I were doing the show and we're Phoenix residents, I'd be singing a different tune. But it's just a really difficult spot from an affordability standpoint, the combination of low inventory plus the rates where they sit at today. And I don't know if just lowering rates really solves this problem.
No, I don't think it does. And look, I'm sitting here from a position of owning a home and having the stability of that ownership at a low interest rate. So, look, I have a privilege here that a lot of people that are in the rental market just do not have and might not have in their future. And, putting myself in those shoes for a minute here, can you imagine, I'm trying to imagine here for a minute renting a home with my 3 kids going to school in that school system and not having that stability of knowing that we'll even be able to continue to rent that home in the future and actually keep my kids in the same school system. Like, that would be, in and of itself, just a dramatic, difficult situation to be in that I know millions of Americans are in on a day-to-day basis. So I don't mean to criticize that, and I do acknowledge how difficult that state of play is. On the positive side, if I'm looking for a silver lining here, in terms of the apartment market right now, the national median rent sits at $1,400, which is a dramatic uptick from pre-pandemic levels when it was sitting, if you take a look at this time in 2019, I think it was around $1,100 or $1,200. So we've gone through a massive uptick in rental prices, just like we've gone in a massive uptick in everything that people pay for. But the recent data, I think, is encouraging for renters. The vacancy rate, according to Apartment List of apartments nationwide, is sitting at 6.7%. That is a very high level, historically speaking. Likewise, median rent at $1,400 is astronomical, but it's actually down nearly a full percentage point year over year. Rents don't generally go down on a year over year basis. Maybe month to month, you've got some seasonality stuff that happens, but to me, what we're seeing here is a home market where people don't want to buy, and for some reason an apartment market that's not seeing as much demand, or at least demand that's not quite matching up with supply, perhaps because we've built a lot over the last few years. And so if I am in that position of looking at this buyer's market and saying, I don't want to do that, quite honestly, yes, I know rent is exorbitantly high in much of the country, and I would like to see it come down further. But you're seeing a pretty stable rental market in here where I think you might be able to lock in at least a reasonable deal in comparison to coming up with a 20% down payment on a home that's going to cost you, 30% more than it did pre-COVID, and interest rates that are going to be in the high 6% range. Like, were this me, I would be renting and being, really, really picky about the apartment that I get to try and save money, and then socking it away for that day when hopefully rates do come down and maybe inventory is a little bit higher. Because, yeah, I agree, this buyer's market, especially here in the Northeast, is just ugly. It's just really ugly.
Even to your point, Mike, like, you got to move to Texas or Florida to get these deals. Like, you're sitting there like, I would rent. And I'm just sitting here saying, yeah, you might go rent in Austin or rent in Orlando, Florida, or Phoenix. It's just the Northeast is just tough. It's really tough. It
is. And I don't know that there's an easy fix to this. We've talked about the only really fixes out there is building more. And we've seen that fix some of the problems in some parts of the country. Go look at the housing market in Florida and Texas and Arizona, where they have allowed a lot more building and they have loosened zoning rules. And finally, you do have homes for sale in those markets that are maybe not reasonably priced, but at least they exist. Here in the Northeast, I've talked about this before. Connecticut is the perfect example of this. 20% of the 2019 inventory of homes for sale available for sale in Connecticut right now. I don't know what might be worse. I haven't seen any states that are worse than that in terms of their available inventory levels, but that is just impossible to potentially buy a home. And so we do tend to focus a little bit here on the Northeast market of things, when the reality is that in other parts of the country, it's looking significantly better. If only you could hold on to that Massachusetts salary and buy a home in Florida or Arizona, then that'd be a hell of a trick. But for most of us, that's not doable. Let's take a quick break. When we come back, I want to talk about the state of student loans right now. A huge number of people, I think a record number of people, owe a record amount of student loan balances. I want to talk about that and then get an update on the cost of attending some local universities in the New England area. We'll cover that next. And trivia for you coming up next.
There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Many of us have retirement savings that are held in tax-deferred accounts like 401ks and traditional IRAs. Hi, this is Chuck Zada from the Armstrong Advisory Group. A heavy reliance on tax-deferred savings has significant implications, such as facing large tax bills during retirement. If you've been diligent about saving money, you might find yourself in the same situation after you retire. Our new guide this month is called Retirement Tax Efficiency. It outlines ways to develop a plan that helps you manage your retirement income and limit your tax liability, putting you in a more advantageous position for a secure financial future. Get your free copy today by calling 800-393-4001. That's 800-393-4001, and you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Celebrate National Farmers Market Week, August 4th through August 10th. This is the perfect time to visit your local farmers market and indulge in the peak of summer's bounty. From juicy tomatoes and sweet corn to fresh berries and more, your favorite seasonal produce awaits. Support local farmers and enjoy the freshest ingredients. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Trivia brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, which we'll talk about later, spinach and artichoke dip, and warm pretzels dipped in beer cheese. And don't forget to join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now, that's eating good in the neighborhood, void where prohibited. Dine-in only. Day 2 of our new theme of trivia here on the Financial Exchange, the 1980s. In the 1980s, might have had the peak decade of children's toys. Transformers were a massive hit. Hungry Hungry Hippos was an incredibly popular board game. Cabbage Patch Kids caused riots, and Pound Puppies were a must-have. But this simple toy, introduced to the U.S. in 1980, outsold them all and is still going strong to this day. Trivia question today: what was the highest selling toy of the 1980s? Once again, what was the highest selling toy of the 1980s? Be the fourth person today to text us at 617-362-1385 with the correct answer. You'd win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the fourth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Paul, terrible news. The number of federal student loan borrowers with six-figure debts is on the rise. In the second quarter of 2024, 2.4 million borrowers carried a federal student loan balance between $100,000 and $200,000. That's up from 1.8 million people who owed that much since 2017. And now, for the first time ever, 1 million people had a federal student loan balance of more than $200,000. Man, talk about scary. I can't envision anything scarier than staring down a federal student loan balance of six figures, let alone $200,000. But I'll tell you, I understand how you get there. I'm taking a look here at college tuitions just kind of around New England. So starting at the traditional most expensive ones out there, Yale these days going for $85,000, $62,000 in tuition plus $23,000 in other costs. Granted, you do usually have some. Oh wait, sorry, that's the 2021 year. Hold on, I need Yale University's 2024, 2025 total cost of attendance. There we go, $91,000 for the 2024, 2025 year for Yale. Let's take a look now at Tufts, who has been called out previously, my brother's alma mater actually, in terms of the total cost of attendance here. Come on. Direct and indirect costs, 2023, 2024.
I'll fill in that BU and BC are up around 90, just knowing that offhand, while Mike
so tuition
for Tufts tuition.
I just hate when they do this. Like every other school lists it out and sums it for you. Now I have to do the math on my own. But Tufts has $69,000 in tuition, plus what looks like about another 20 to 22 in additional costs, so you're right up there at 90 as well. When I go and take a look at some of the state schools across New England here, and for instance, a couple of years ago, in-state tuition even at UMass Amherst was going for $33,000. If you wanted to attend from out of state, it was $55,000. Now, with the most recent numbers here, for in-state, you're looking at $35,000, and for out-of-state, you're going for $57,000. I mean, $57,000 to attend UMass Amherst, which, don't get me wrong, a fantastic school. But it's a state school in Massachusetts. Yeah, sorry, out-of-state is actually now up to $60,000 if you want to attend UMass Amherst from out of state. And quite honestly, I expected University of Maine and UNH to be a little bit cheaper on that front because they advertise as such. Like, I remember the ads back in the day where, attend UMaine from out of state for the same cost of going to UMass in-state. It's not the case anymore. The total out of state cost for University of Maine is $53,000 for a 1-year education there at UMaine. So, I mean, for me, the obvious answer here is that, yeah, if you live in Maine and I can attend UMaine for $30,000 with no scholarship whatsoever compared to, any other place I can go to, I'm surprised there's not more demand for this. I'm fortunately a good 10 years out from this decision, but it's not shocking to me how families are going into a couple $100,000 worth of debt to fund this education.
And what's not mentioned there is the acceptance rates, because I feel as if anecdotally it's gotten much more difficult to get into schools like UMass Amherst, Mike, because people have realized just what a good bargain it is. It does look like their admissions rate was sitting around 64%. I got to track it over time, but certainly you would imagine that it just gets more and more challenging to get into these types of schools because people realize what type of a bargain that it is. And this flies right in the face of what we covered in the first hour of the show. John Michelson from the Wall Street Journal mentioning that most people had paid off their student loan debt. I guess that's not the case with 1 million people now owing more than $200,000 in student loan debt out there. It's frustrating.
If you missed this segment, there was this piece in the Wall Street Journal today. Granted, it was an op-ed piece, but it was making the argument that, hey, the Fed shouldn't cut rates because don't worry. I mean, most people have paid down their student loans already, and in fact, you have more people than ever carrying $200,000 balances. But besides all that, it is not the responsibility of the Federal Reserve to deal with people's student loans and make them more or less affordable. That is not under the purview of the Fed. That if Congress wants to go and enact mass student loan forgiveness, then have at it. I think it's a stupid idea, but have at it. But that is not the job of the Federal Reserve. And then, yes, this piece from John Michelson claiming that most people have made big payments on their student loans is just very provably false. I'm not sure why he made that claim without looking. You can open up a web browser and Google's AI will give you the answer to that in a flat 6 seconds. Speaking of which, I'm assuming you two, Tucker and Paul, with your iPhones are just waiting with bated breath for the next update from iPhone for your artificial intelligence features on Apple's products.
You fancy iPhone boys, you.
Yeah. I'm here with my Nokia from 1996, so I don't know what you're talking about.
You know, it's cool, flip phones. I don't think I'll qualify for this because it seems as if only
I have an older phone.
Yeah, the iPhone 15 Pro is going to be getting these iOS 18 Spot 1 updates here. So it's going to be a little bit of time before this trickles down to what I believe is my iPhone 13. But I always laugh. I hope Siri gets better because my dad uses it as his assistant, and she's been slacking for a long time now. She just really
anyone that receives text messages from dictated versions is really, really tough to comprehend that. My father-in-law does the same, and it's no idea what he's talking about 90% of the time.
Not great, Bob.
Let's take a quick break. We're going to have the trivia winner when we come back.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, is the healthy spouse allowed to keep anything when the sick spouse enters a nursing home? And what happens if the sick spouse has the majority of the income?
Great question, because when you're talking about applying for Medicaid last minute, or when someone enters a nursing home and you want to do this last minute, they're going to look at both assets and income, right? So from an asset standpoint, as a married couple, they do allow you to keep approximately $148,000. That piece is indexed for inflation or changes every year. The sick spouse is allowed to keep $2,000. So you're around $150,000 of total assets that you can keep. By the way, if you're single, you only get to keep $2,000 in assets. From an income perspective, the good news is that the healthy spouse can keep all of the healthy spouse's income, Social Security, pension, you name it. And so it does not matter how much income the healthy spouse has, but they are entitled to at least a minimum monthly maintenance needs allowance, but no maximum.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That number again is 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month. Call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
There are many factors to consider when planning for your retirement, including the importance of your tax liability. This is Mike Armstrong from the Armstrong Advisory Group. Reducing tax liability can be potentially more effective than chasing higher investment returns. If you are nearing retirement and need to understand how to help your investment approach and limit your tax liability, call us at 800-393-4001 and request our new guide called Retirement Tax Efficiency. We'll educate you on ways to create a tax-efficient strategy, as well as the basic steps that make up a sound retirement plan, including how to protect your money in a down market. Call 800-393-4001 and get your guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Trivia question today was, what was the highest selling toy of the 1980s? That'll be the Rubik's Cube. The Rubik's Cube was invented in 1974 in Hungary by inventor Erno Rubix. The toy was introduced to the U.S. in 1980 and after a few months became a phenomenon. It is estimated that 200 million Rubik's Cubes were sold between 81 and 83 alone. In 2014, the Rubik's Cube was actually inducted into the Toy Hall of Fame, which I did not know existed. Raphael from Springfield, Mass. is our winner today, taking home a Financial Exchange Show t-shirt, and Raphael's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Enjoy half-price late-night appetizers after 9 p.m. and join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now, that's eating good in the neighborhood. Void where prohibited. Dine-in only.
Tucker, do you know where the National Toy Hall of Fame is?
I'm going to guess somewhere just outside of Los Angeles.
No. Wrong coast.
Albany, New York.
Close. Rochester.
Okay.
Nice.
Yeah. The Strong Museum in Rochester, New York houses the Toy Museum. I tried to learn more, but our IT department's parameters around what we're able to access at work blocked me.
Don't look at toys at work.
I had that recently with actually a legitimate research purpose. It was like gambling. I'm like, wait a minute, this is not gambling.
Yeah, this one classified it as gaming, so they didn't want me taking a look at that one. But I'm pretty sure it is, in fact, in Rochester, and you can learn more by
it's at the Strong Museum in Rochester, New York.
There you have it. Paul, the newish CEO of Starbucks took over in March of 2023. Since that point in time, the stock's value has lost about 25% of its value. That's Starbucks. And can you remind me, what's the guy's name again? The CEO of Starbucks now?
Laxman Narasimhan.
You saw that one coming. Not bad. I think you're missing a syllable there, but that was not too bad.
Narasimhan.
Yeah. Yeah, that's good. Anyway, he's been working at the head of Starbucks since March of 2023. In the meantime, the former CEO of Starbucks, Howard Schultz, keeps lobbing criticism at him while he's doing it. Tossing grenades from the sideline at this new hand-picked CEO that he personally trained, which, I don't know, between Howard Schultz and the Disney CEO, Bob Iger just criticizing their own hand-picked replacements, I just find hilarious. I get how being, the personality that goes into being a CEO, especially a CEO founder, makes it really challenging to give up the reins, but to try and do the job while this previous CEO is just criticizing you constantly cannot be an easy thing. But the problems that they have experienced over the last year and a half, do you see them as unique to Starbucks, or is it just the same problems that have hit every food services chain out there?
To Mike, it seems to me that some of these consumer discretionary companies have been really beaten up over the course of the last year. So a lot of it does tie into China, and Starbucks is right in the face of that, where they're having real difficulty selling over there. Tesla has been another example of a company that struggled to sell as well in China. Nike has had all sorts of issues there as well. So I feel like it's part of a more broader trend where this sort of discretionary companies like the Starbucks, the Nikes, Tesla, Lululemon, another example as well, have struggled in general. I just wonder from a strategic perspective, the pivot or where Starbucks goes from here. We've talked about on the show that they had adopted mobile online ordering. It seems like every time my wife and I have tried to go there, I'm not a huge Starbucks fan, she is, that it's just an overwhelming amount of items on the menu or different iterations from a drink perspective that Starbucks offers, and to be able to churn them out with the speed and efficiency of, let's say, a Dunkin' Donuts, which isn't as complex, it just seems like they're in a tough spot where they're not your traditional coffee shop that they were built as when they were branded by Schultz in the 80s, and they're not, the fast, quick of a Dunkin' Donuts or pick another national chain out there. It's a tough spot that they're in.
It is, yeah, especially when everybody's been hurt by inflation and is looking for a value. It's not exactly what Starbucks is known for. They do have the distinct advantage of offering a product that is physically addictive, so I won't ever count them out. That's an important one. But here's, in my mind, you have the problem of, hey, we've got kind of a reputation of being the more expensive option there when it comes to satisfying your caffeine addiction. The other piece would be that for a long time, better part of a decade, I felt like Starbucks had the real critical advantage when it came to phone app-based ordering, where they were really the main game in town. Today, most of their competition has caught up. The Dunkin' Donuts app, the McDonald's app, the Chipotle app, they're all offering you deals at any given point in time if you allow them to do so. And so that early adapter, I think, advantage that Starbucks had in getting their inventory systems and order management all online and all on your phone was a really big advantage for years. But now they have not innovated that into something new that's going to be an advantage for them now. And their stock has been struggling because of it.
The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. The summer heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean Paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
Paul, I was going to take this moment to disclose personal information about you in true Barry fashion, but I'm going to take a step back and instead do that about my sister, who's expecting her second and third children later this year. And they are in the market for a new car. I'm, of course, pushing them down the direction of the minivan, so I'll let you guys know if I am successful on that front. But Paul, is your family in need of a new vehicle anytime in the near future? Tucker, you guys looking at new cars?
It's interesting you brought that up, Mike. First, I do have to ask Tucker, did my sneeze get caught on live air?
I could hear it through my headphones. So.
I could hear it too.
I held the mute button. Okay. It's technology's fault there. Anyway, moving on. I did broach the subject with my wife about a minivan, and she is adamantly against it, saying that she will absolutely never be caught dead driving one of those. And this is after a conversation that I had with coworkers in the office last week, which I had been of that position as well, but they were starting to sell me on it. And
we might need to create a highlight reel of just me and my minivan. That might convince her. Actually, that would definitely prevent her from ever buying a minivan.
Who's that sexy dad driving around from your company, Paul?
Not Mike. Here's the real crux of this story: is that car makers, really across the board, but I think with a special concentration in U.S. automakers, seem to be struggling of late. They've made this strong and expensive pivot towards electric vehicles, investing heavily in manufacturing on that front, and battery tech, and really just taking a barbell approach for a lot of these U.S. automakers of, we're going to sell really expensive trucks and big SUVs, which are high profit margin items, and then we're going to try and make a push into electric vehicles and kind of ignore the rest of the market. And unfortunately for them, I think that rest of the market, maybe the small SUV or sedan, might be having its heyday right now as people are kind of experiencing a backlash to all the inflation we've seen and looking for a bit of a deal. When you take a look at 2023, the top selling small SUVs, U.S. automakers barely make it into the list of the top 5. First, you have the Toyota RAV4, followed by the Honda CR-V. The Nissan Rogue takes the 3rd place. Finally, you have a Chevy Equinox in that space, followed by a Subaru Forester. And I just wonder about U.S. automakers in particular and their ability to really capitalize on this strategy that they've been employing.
No, it's interesting. Toyota is a company that didn't dive headfirst into the EV market and tend to focus a little bit more on the hybrid side of things, and I just wonder that they were criticized for it, and the further this plays out, it does seem like perhaps that they had the right approach in being a little bit more prudent in terms of their capital spending, because it's really expensive to enter into the EV market, and at the same time, if you're only focusing on sort of EV or the higher end with these trucks, it puts you in a difficult spot to meet that sort of middle of the road pricing and attracting other vehicle purchases out there. So it's a difficult spot. These car companies have really been beaten up post the earnings reports that we saw. Ford, Stellantis, all of these ones, Mike, have really taken it on the chin.
Yeah, I'll say I had never actually purchased a new vehicle until 2022, when for the first time ever I bought a new Honda, because if you remember back then, the used car market was just insane and as impossible to buy or get a good deal on compared to the new market. So I ended up buying a new, actually brand new car for the first time ever. But I'll tell you, just looking at used cars and taking a look at the cost of a used Tesla is kind of a hobby, I guess. And man, prices are down really across the board, especially in that used auto market. They're not 2019 prices, but the numbers that we've quoted out there of used car prices going down 10% year over year appears to definitely be the case based on what I'm seeing on sites like AutoTrader. So for those that are being forced into this car market right now, not the worst time to be out there looking, albeit with very high interest rates. So that part of it makes it difficult. But in terms of pricing on used cars, there are some deals to be had out there for the time being. Let's take a quick break. When we come back, we'll have a market recap and then a bit of stack roulette.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Many of us have retirement savings that are held in tax-deferred accounts like 401ks and traditional IRAs. Hi, this is Chuck Zada from the Armstrong Advisory Group. A heavy reliance on tax-deferred savings has significant implications, such as facing large tax bills during retirement. If you've been diligent about saving money, you might find yourself in the same situation after you retire. Our new guide this month is called Retirement Tax Efficiency. It outlines ways to develop a plan that helps you manage your retirement income and limit your tax liability, putting you in a more advantageous position for a secure financial future. Get your free copy today by calling 800-393-4001. That's 800-393-4001, and you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
If you or a loved one needs a nursing home stay and you aren't prepared, the expense can be devastating to your savings. Understanding the Medicaid process is a key element to any successful estate plan. So call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. It'll walk you through any changes to the Medicaid rules, how to adjust to those changes, and best practices that can help educate you on how to manage expenses you might incur down the road. Don't leave your assets to chance. Let the experts at Cushing & Dolan help you protect your wealth and keep it away from the nursing home. Call right now, 866-848-5699, and get your free copy of this new guide, Last Minute Medicaid Eligibility. That's 866-848-5699. You can also request the guide online by visiting their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
There's an issue cutting through the partisanship in Congress. It's AM radio. The overwhelming majority of legislators, Democrats and Republicans, support a bill to keep AM radio in cars. But time is running out. Text AM to 52886 and ask Congress to bring this bill to the floor for a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Equity markets have worsened a bit as we close in on the noon hour here. The NASDAQ now off 290 points, or about 1.4%. The S&P down 39.7%, and the Dow up still by about 0.1%. Bond markets barely moving. 10-year Treasury yield sitting at 4.166%, and the price of a barrel of oil, fortunately, coming down another 1.5%. West Texas crude now sitting at just under $75 per barrel. Paul, what do you have for us for Stack Roulette?
Boneless chicken wings can have bones. After all, the Ohio Supreme Court
Ohio.
rules. Just a crazy case here. A man who ate boneless wings in 2016 sued an Ohio restaurant after ingesting a 2-inch bone that tore his esophagus. However, his case made it all the way up to the state Supreme Court, where the judges ruled in a 4-3 decision last week that he should have expected at least the possibility that the boneless chicken he was eating may have bones. Just
there you have it.
Frustrating break for our guy here.
This poor guy, he had to go through 2 surgeries, and he's still lost in court.
Yeah, that's pretty rough. I also just do wonder, like, was this guy just wolfing? How do you?
Yeah, this is my thing. Is that if he had taken one
he
bite,
was housing these wings.
If he had taken one bite, he would have run into this issue.
They're not oysters. I'm just struggling to comprehend. I mean, look, in my opinion, if you advertise something as a boneless chicken wing and then there's a bone in it, then you've got some splaining to do. I'm not sure that. I'm not exactly sure why the court didn't just say, this is ridiculous, we're not going to rule on this. They felt the need to come out and say that if you're ordering boneless chicken wings, you should have an expectation of bones being in there.
Similar to a fish fillet, right?
That to me was a little bit confusing, but nonetheless, a little bit of humor to finish off the show today with the Ohio Supreme Court determining that, yes, in fact, boneless chicken wings can have bones, so buyer beware, I suppose,
this guy's got to be
the lesson on this one.
He's got to be a big guy. I'm trying to look it up here.
The article,
there's no way he's clocking in at 150 or 160.
The article noted that he was a regular. So,
yeah.
He was housing these fingers.
In any case, that's where this one landed here. Amazon making a push for fast delivery to some of the more rural areas of the United States, and really some of the last areas that they don't already have this available. But Tucker, Paul, you and I have talked about, all of us have talked about how just ridiculously easy it is to get something delivered to our homes the very next day. Obviously, that's not as much the case if you, for instance, live in northern Maine. If you're 3 hours north of Portland, my guess would be you're not getting the same fast delivery. But Amazon really trying to tackle this last segment here and not relying on the U.S. Post Office for these areas as much as they have, in spite of the fact that the United States Post Office does require to have a presence everywhere in the country. I do wonder, I was actually why I found this so relevant is I was speaking to a retiree just the other day who they decided to retire to not a completely rural area, but certainly a more summer area of Maine pretty recently. They retired to the Rangeley area of Maine, which, if you're not familiar, is a lakes region on the New Hampshire border in a pretty northern part of Maine. And they spent a few years there and realized that they really couldn't do it. And part of the reason was medical. They had to travel a long time to get to their medical appointments, and then their doctor had prescribed some eye drops for her, and she had to tell the doctor, like, yeah, that all sounds good, but I do live an hour and a half from the closest pharmacy, so that is becoming problematic. So in their case, they ended up relocating, but with Amazon making this push, in their case, I just don't think they were comfortable with the idea of, ordering the majority of their stuff on Amazon. But with Amazon and other retailers making these pushes into more rural areas, I do wonder if it just kind of opens up the possibilities of where people feel comfortable retiring. Granted, in this case, you're still also quite a distance from any hospital, but if you're able to get a majority of your pharmaceuticals even delivered via Amazon, what does that do in terms of where people concentrate in retirement would be an interesting question to me.
Still, you need to have access to the health resources you mentioned. I think that's significant, and obviously for people in retirement, proximity to family can be important too. So it's hard to really say. I just wonder from a profitability standpoint, I understand how low the volumes are, USPS and UPS handling Amazon's packages, but it seems like the Amazon cloud system really needs to power a lot of these endeavors, because I can't imagine it's profitable to go into such rural territory.
It depends, Paul. I mean, I would think not, but if you are looking at, hey, who are the last Americans that aren't already paying that $140 a year for Amazon Prime? I'd imagine it's some of these people here, and if they're starting to get more, the other big push that has come in rural areas has been high-speed internet, and so if you're being met with, okay, rural areas are now finally getting high-speed broadband internet, and we want to sign them up for Amazon, this might be that last push. So long as they don't order too much stuff, we might be all right, I guess is the answer. Let's take a quick break for the next 22 hours. We will be right back at it. Remember, after the close today, we've got Microsoft earnings, and then tomorrow afternoon, Federal Reserve taking the stage with their interest rate setting policy. A lot to cover. We'll be back at it tomorrow. Have a great afternoon, everybody.